Hey, what if I told you the producer price index just showed a decline in wholesale inflation, but it's not what it looks like? The August 2025 PPI is sending shockwaves through the market. But the real story is tariffs, supply chains, and how much of this inflation story is just smoke and mirrors. Hey all, welcome to ShareTreck, where science meets investments, and I'm your host Raj. Friends, today we are going to unpack how the PPI, tariffs, and the upcoming CPI report could set the stage for not only the Federal Reserve policy but also Treasury yields and equity markets in the week ahead. On surface, the August PPI fell 0.1% month over month. That looks like a big win in the inflation fight, but let's not take it at face value. Here's what is actually happening. The decline was driven by trade services margins dropping 1.7%. This is tied directly to tariffs, not broad disinflation. If you strip out food, energy, and trade services, the cleaner core PPI actually rose 0.3%. That shows domestic inflation remains steady. In other words, the headline number is misleading. Friends, if you're finding this kind of breakdown helpful, please press the like button. It really helps the channel reach more investors like yourself. Let's continue. Let's talk about the two stages of the tariff impact. Stage one was July front loading. Businesses rushed to import goods before tariffs could take effect. That temporarily boosted import volumes and nudged PPI higher. Step two, August slowdown and margin compression. Once inventories were stocked, new imports fell sharply. To stay competitive, wholesalers and retailers decided to absorb tariff costs instead of fully passing them on to customers. That squeezed margins and made August PPI look deflationary. This is the crux of our PPI theory. The decline is artificial, a side effect of inventory timing and tariff absorption. It's not a broad trend, in my opinion. The Fed knows tariffs aren't sticky inflation. Combined with softer job data, the PPI print strengthens the case for a rate cut. That's why we saw Treasury yields dip and equities rally almost immediately. Markets are betting that the Fed has more room to ease. Now, the real test comes with the CPI report. Will consumer prices show the same margin compression? Well, here are three scenarios. Scenario number one, CPI below expectations, which I would call as a dovish surprise. If consumer prices fall more than expected, it confirms companies are absorbing tariffs across the chain. That's a green light for the Fed to cut. Expect bonds and growth stocks to rally, dollar to weaken, and this could be a case where we may probably get more than 25 basis points. Then the scenario two is CPI is on expectations or neutral. If CPI matches forecasts, it means PPI effects haven't fully reached customers yet. The Fed will still lean dovish and the markets will still hold steady, and you get the 25 basis point. Then the third one is CPI is above expectation, and this I would term as a hawkish shock. If CPI runs hot, it means tariffs are hitting consumers despite wholesale margin cuts. That kills the rate cut narrative and sends bonds and stocks lower and strengthens the dollar. I don't know which of these three scenarios will happen, but here is my takeaway. So here is what I think. The August PPI decline isn't the start of disinflation. It's a tariff-driven distortion. The CPI report will decide if the Fed can cut safely or if sticky consumer inflation keeps pressure on rates. I personally think that the Fed is facing a stagflation because on one end, you can't discount the number of jobs that have been lost. The job number revision was also shocking. It was a huge number. And we also have the deportations, which means many people have been deported who were earlier doing some productivity, which they are not doing now, therefore not contributing to the GDP. And they were earlier customers consuming stuff which they are not consuming right now. So all of these distortions do apply. Now, I would like to hear from you guys. What do you think is happening out here and what's likely to happen tomorrow? Do you think we are going to get a benign CPI report and probably get a 25 basis point cut? Or do you think the CPI is going to come way below expectations and we're going to get a 50 basis point cut? Please let me know in the comment section. Well, friends, that brings me to an end of this video. I've tried to keep it short and concise, so I hope you have managed to see the entire video and you're seeing my sign off. Bye for now.